Hey, how you doing? Welcome to the channel. So today, just a quick little stock market update and some video gameplay, because I just feel like it. So let's see what's going on today. Interesting. So here we are today. Here's the NASDAQ. So you can see the NASDAQ's down just a little bit. It really hasn't done that much today. So a couple things that, kind of note is, this had come down corrected, couldn't really hold the 50. 21 crossed the 50 to the downside, but then it's really kind of found some support here, and it kind of hasn't really tested the lows back there. So in a way, I guess that is positive there. If we look at the SNPY, where's the SNPY? SPY, that's not the one I want to go to right now. Yeah, I believe we had SPY. It was down a little bit today, but it's kind of well in its uptrend. Really no change there. And what's interesting, XLP still in its uptrend. But today, look at, this is interesting. Look at, they came after. The worst performer was XLP today. So the thing is, it had a decent run. So you would expect that you could have a decline for sure. But it's kind of interesting. So do we have a setup here? They pulled money, they've been dumping money into consumer staples as mirrored by the XLP, and today they sold it off -1%. At the same time we have that, we have a lot of our little companies here, little crap guys putting in, look at this, ARC putting in a decent update, 3%. But I mean, the good thing is it's like holding the resistance, holding the support, pardon me, the previous one from there. So you see that with like the ARC, you see this in a variety of these stocks. Like here, this is like a bullish engulfing, it went up and covered the whole previous day. And the volume isn't super great, but still it's, pretty reasonable. And then here, another bullish engulfing here today on in phase. And, once again, it kind of held today above there, not great volume, but still kind of held. And then here you had a little hammer. So this thing has kind of like, hit the 200-day moving average and found some support. So GameStop is kind of on its own, hanging up there today. NEO. So here's NEO, another good day here. It's kind of holding this support. And so now you have the W setups. A lot of these stocks are all trading in a very similar way. These guys that have been getting the crap kicked out of them are now kind of, look at this. Here we had a little uptick in volume. We'd have a bullish engulfing up 4% day on Tesla. So what does this mean? The answer is like, this is not financial advice. Even look at this XPEV. This is certainly not financial advice, but what, here I've been out here and I've been talking about how, people going out into stocks like this and buying the dip and giving them a hard time about that because, it's just crazy, but, hey, I'm also like, I just look at the charts and now we start to have some kind of possible setup. This isn't great, but you have a W, you're finding support on 2 different days here above the previous low. So this is where you start looking at it from my point of view is like, hey, there's potentially some support. Now, the question is, would I buy some garbage stocks like XPEV or something? I don't know. I don't know what I would buy, but I'll be kind of just looking and watching because I'm kind of curious, like, hey, maybe now is a time to buy some Tesla or to like set up to buy it when it breaks the W. This is what is required, some patience. You can't just keep buying it every day when it's dipping. So looking at these, it's possible there's a W there. And it's possible. Now, the key is going to be, understanding the key is going to be, it has to break out from this range. So all these stocks, get the NEO, Tesla, Enphase, all these kind of stocks are in the same thing. They've come down, sold off hard through the moving averages, pulled the moving averages, the shorter term ones on a downtrend, and even the 50 on a longer one. So now the thing is they have to really, break through here. Now, one of the things that could happen with these guys is because there's a lot of damage here, there could be a lot of resistance at this point, the center of what is, so this isn't a W. We're thinking this could be a W. So once again, we're kind of jumping and getting ahead of ourselves. But you know, that's a potential setup. Like, so, you know, like in a W type setup, you buy above the high in here. Now, of course, that's too far away for most people to say, like a Neo, well, I'm not going to wait then. If it's going to go through there, I'm going to buy it now at 38. Well, okay. But once again, you don't know if it's just going to go up a little bit here and then continue its downtrend. You don't know. Right. But on the other hand, you know, it's, you know, playing a little bit with it. I mean, it could have potential decent return. You know, if you looked at it, you bought it 38, maybe before it starts getting hit, you know, you got a couple points, maybe 4 points before it starts hitting really heavy resistance, possibly. So, you know, it might be a move to make. So once again, this is not financial advice. This is this stuff I'm looking at. So I think just, you know, to kind of put it in perspective, if, you know, you're watching people that are always pushing these stocks and they're pushing them and they're trying to pep you up as they keep losing money because they keep doubling down and stuff that's going down. And then you have people like me that are saying that's really silly and stupid thing to be doing. You know, I'm not married to my view. I mean, this now is if this pans out to be what it could very well be, you know, this could also be a consolidation range go on for several months or whatever. But now you have an area where it's like, okay, now you have some charting behind it. You know, it's not a falling knife anymore. We've proven some support here. And if it starts to pan out and from there, then you can apply some technical trading to it and have a nice place to try to get in where you can limit your losses, right? That's what it's all about. Like here, like if I was buying here, like tomorrow or something, you know, I know I'm wrong if I break below 34. It's like okay, yeah, I'm risking $4 on $38 is a lot, but it's better than risking 60, you know, buying up here randomly because you read something at $60 and riding it all the way down to 34. That's like almost 50% loss, right? This is more of like you know, a 5 to 6% loss, whatever it is. Right. So that's what technical trading is all about. That's what charts are all about. They're trying to get you a way to limit your risk. So, but you can't limit your risk unless you know, unless you have some kind of information on the chart that showed you where it found support and where it found resistance, right? You can't do it the other way. You can't be in the middle of this downtrend here and just randomly, oh, I'm going to protect myself by, if it goes down more than 4% on a day, then I'm just going to sell. Well, you keep doing it again and again and again, you're just losing money. You're getting your stop loss, you're just getting hit. So you don't want to be doing that. You know, you have to wait till there's a point where there's some kind of pattern. You need a pivot. You need something. You know, there's a million different patterns and all that stuff with various degrees of success. So, you know, that's kind of the thing. But when I see them and you're like, hey, I'm looking at it, you know, and so I may jump in there, do something. Who knows? And then the other thing, you know, the yields were up, but they did kind of reverse and traded down somewhat of the day. So, but still, once again, we're at our high. So interesting. So gapped up, high yields, and then kind of just sold off to be pretty much flat for the day. So we still have, you know, we still have the yields. So let's just zoom out in the big picture. We still have yields pressing up into this resistance. You know, maybe they're going to settle out here. Maybe, you know, I don't know. There's no way you can predict, but they did make a move. So that puts pressure on things. And the dollar, you know, the dollar once again is making a move as well. It's kind of, you know, it's interesting because there's this guy, I can't remember his name. He's an old school trader, wrote this book from the 80s, and he did everything on weekly charts, you know, all his stuff and just really good stuff. And that's why I have this set up this way, because this guy, you know, I have the 30-week and the 10-week moving average, because that's kind of how he would trade. He'd be trading, you know, the weekly charts, and he'd be looking at something like this and being like, okay, yeah, that would be something he'd start entering on, because like, look, you have enough built up change in direction that you're pulling the moving averages around, and then look, you're going to possibly this 10-week cross the 30-week. That's a bullish cross. That's a golden cross, man. Boom, right there. That's potentially setting up for that. So now you have the market with the dollar going up, rates going up. It's sort of set up for a longer term problem, but in the short term, you're set up for Oh my gosh. Why? Okay, I see what I'm doing wrong. Dollar composite. That's stupid. But in the short term, you're set up with a W here. You're set up with something where it's like this thing can try to make some runs here, and looking at your slow stochastic, boom, it's kind of like the black is crossing the red. It's because you were kind of oversold. You just had a lot of selling and like, okay, it could just abate, but of course over here, look how it just kept like different selling. It recovered a little and whatever, but there could be a setup there. So yeah, so I think that's it for that. We'll see what happens tomorrow. And let's see what's going on over here. See what's going on. Oh, it's raining. Oh, raining, man. I don't like rain. So yeah, so that's what's going on. Yeah, it's interesting because this company, this hedge fund that went bust. I mean, it's really hard to figure out. You just wonder how many other ones are out there that are just like in a bad position that are ready to go bust. As I was pointing out the other day, you're just always, the performance of your stocks depends on really what other people are doing. And that's sort of why you can't do. I felt that's sort of why sort of like calling people weenie babies and being like, oh, they're just idiots, they don't get it. And it's like, okay, but these people that don't get it, that are going out there, and running up their margin, running up their margin, these are the people that you're relying on for your investment to pay off. Because and you might look at it and say, no, I'm not relying on speculation. This is investing. These companies are going to make money. Well, no. Yes, there's a correlation, right? There is for sure a correlation between companies that do have better earnings, that their stocks go up and stuff. But still, the bigger part of the stock price, given that like you're talking about most of the stock price is a multiple of the price to earnings ratio. So, if the company's making, $10 per share and, and they do a great job and they, double their income to $20 a share, okay, the price, you think would double. Okay, but if the market is, having trouble at that time, and you can see this again and again and again, it doesn't matter. It's not going to double. And matter of fact, the stock may even go down. Of course, this is what this is what, value investing is about. Value investing is about, oh, people get themselves in trouble, right? They then have to sell stocks that they otherwise wouldn't really want to sell, but they have to sell them because of margin and losses, et cetera, and they sell them. And that's exactly what you saw happen with this hedge fund. And this has happened so many times. This is not a new thing. And I think it's, you gotta, it's a tough one, right? Because, you're sitting there like, oh, you're smart. Well, no, maybe you are, maybe you're not smart. I mean, you're just relying on what other participants in the market are doing. If these other participants like the story and buy, then okay, then your stock's going to go up. But if they don't like the story, they're going to sell. And what is the statement? The statement is there's this saying, and I don't know who said it or where it came from, but it let's see. It goes something like this. It goes like 100 wise men can't figure out how to get a boulder out of a lake that a moron threw in. Something to that effect. So basically, that's just how life is, right? You can have a freaking idiot can go out there and just basically destroy everything, put untold amounts of stress on the financial markets because they're just out there blindly just going crazy and overdoing their leverage, and they can create such a mess and cause so many losses for the smartest and biggest banks in the world that they can just affect the whole market. And that's just the environment you're in. So what is the only acknowledgement of that? What is the only way to look at that and acknowledge it? Well, technical trading, it's the only chance you have to kind of, and of course it doesn't work. The quick moves, it doesn't work, right? So basically when it's like, uh-oh, some investigation or something happens about a company that otherwise technically was fine, it just gets imploded. Well, yeah, there's nothing you can do. Technicals don't save you from that. But very often they'll give you like a sign. You'll see the distribution very often ahead of time, especially things, slower things, if their earnings are declining, or the prospects for the company are declining. And it's not material enough at that time for them to have to come out with special earnings and report. They don't have to do that. And if that's the case, there's it's really messed up, because there really are insiders selling and stuff. They really are. And that's why there's so much focus on following the inside selling, the legitimate inside selling. But the other thing is that you know you have people that know people that know people that are also out there selling, possibly illegally. And of course, that's one of the first investigations. Every time like a stock has a major drop, it's like, oh, this stock dropped. Find out who was doing the selling, or if anyone was selling before, and they investigate. Because very often it's like, notice some price declines before. Look at all the selling. Block trades going through, or whatever it is, right? And you're like, what was going on before they announced like terrible earnings, or that they lost a contract, or there's a lawsuit or an investigation, right? So now here's the thing. But in terms of fundamentals, I agree with using them, because look, you have stuff. If you just look at a chart, very often you look at a chart and you're like, oh, this is a great chart, great place to buy. But the thing is, if you're buying a company that's got really bad earnings and crap, the chart is liable to not hold up. And you'll find that, because you'll find that like, oh, you're buying a company and it's like they're kind of sketchy. And what happens then? Oh, you find out like, oh, well, they have a lot of risk, right? Like maybe a biotech. Like, let's talk about biotechs. That's really a low quality stock, not making earnings, but they have a potential product that's really good. Okay, so you have the fundamental analysis side that's like, okay, this stock may be really good. So you're looking at it, and everyone's looking at it, and they're speculating, and people are bidding it up. But they don't have the earnings, and so that's kind of where things come in. The best plays are with companies that have both the fundamental and the technical. If they only have the technical but the fundamentals are bad, then they're very liable to get pushed around by sudden announcements. It's like a big pharmaceutical company has a pipeline, and yes, they do get hit. They certainly do get hit when their next super drug doesn't work out or whatever. But they don't get hit as much. They don't get hit as much as these little companies, like a little pharmaceutical that's got one drug and that's it. And when that one drug has some bad trial data, and it's like, we have to stop the trial, and then it's just like a disaster for that stock, right? And so so I'm all on board with you do both, right? You do your fundamental and your technical. You do both, and you try to stack them up and get them in your favor. Because the funny thing too is with companies like Tesla and stuff, the technicals are pretty bad. I mean, they're not making much money. The price to earnings are extremely high. So when you look at it that way, what are you betting on for it to keep going up? You've got to have a lot of people ignoring valuation to bid that thing up. It's just what it is. So I think I've rambled for long enough on this one. So talk to you guys later.